Hey guys, Landy here. I want to welcome you to Landy's Crypto Corner. Today is March 23rd, 2023. It is 1 year until the halving. Now, that is a projection based on the blocks being mined, but it's a good estimation around Saturday, March 23rd of 2024. And that does mean that there's a lot of time to go before we see the halving still. A year is a long time. A lot of things can happen in the market. So let's talk about that. We're going to start off today by looking at the Renko chart. And this is a chart that I've shown you quite a few times now in the past few long form videos, and not in a short just yet. I don't think the audience would quite understand the Renko chart. Maybe they would. But in this case, you can see that I've added a lot to this. I've added basically resistances or targets overhead and supports below, just general supports. I mean, there's even some tertiary supports right here at about $22,000. But in this case, this is because I did do a thread on Twitter. I'm going to include this thread about Renko charts. It's basically a super detailed thread about what they are, how they work, and how they're used, and how they can benefit you in evaluating markets. I will link that down in the description below if you want to go check it out. And then I will have basically like a Renko charting masterclass video that I'm going to be releasing very soon. Now, getting right into Bitcoin spot price action here, we can see that on the Renko chart, we're again starting to print a projection brick, or ghost brick, up to the next level because price is trading over $28,000. Now, again, this is running an ATR period of 14, and it's taking the daily time frame, and it's looking back 14 periods and calculating the ATR. That is then creating the box size. When the box size is met, it prints a candle or a brick in this case. Now, we are right in the same zone that we have already kind of seen before. We spiked up just shy of $29,000 now twice on a wick. And again, we are projected on the Renko chart to try up there yet again. Now here to the downside, we can see $27,000. If that gets dropped all the way down to $26,000, and we'd have to see a daily closure and a Renko brick past that $26,000 for us to actually paint a red brick. That's where this would come in, right in this zone here between $26,000 and $27,000. And that would imply that Bitcoin has closed on a daily below $26,000. That would fulfill, even though this is not a time-based chart, I do explain this in the thread, but the criteria would be met for the box size, and then the time period would close, which would lock in the ATR value. And because we have to wait for that ATR value to lock in, because it is a 14 period, it's only going to run when the daily closes. All right. So in this case, we're going to see that print only if we were to close a daily below $26,000, and that would imply targets down to $24,000 to $25,000. And we're going to take a look at the regular candlestick chart and compare where Bollinger Bands are, where EMAs are. Look at some of the other confluences that we might have for either a move further to the upside or get continuation, where some of these pullbacks might come in, and then where's the breakdown. Well, I can tell you right now, a breakdown would be back below $24,000, be a break back to these lows to around that $20,000 to $21,000 area. Now, on a regular chart, we did come in at around 19.5 on spot price action, and that was an area that I had previously called out. We spiked about $50 off of that, so man, I was off by $50, but it was good enough to be that test, and then we just took off to the upside. Now, in this case, you really don't want to see like longer term timeframes close down in these areas below $24,000. You want to see, if you're looking for Bitcoin spot price action to continue higher, you're looking for this at worst come back down, tag around that 25 and a half, and then get bought back up and take out that $29,000 area again. That would beget continuation further up. So did want to kind of point that out. If you do want to check out the thread, it's going to be in the link in the description. So let's jump over to a regular candlestick chart. And you can see that using the Renko blocks to create these horizontals where there is support and resistance and kind of target zones. I kind of paint them like target zones, like green above here, we're going to go up. Yellow, it's kind of danger. We want to see a bounce there. Red, oh no, things are going to go down. Now, in this case, we do have some minor supports there, $26,000 and $27,000. That's where we've been kind of hanging out. And throwing on the, what do I want to throw on here? I want to throw on the my Bollinger Band indicator here. And I want to call out kind of where things are coming in. So, in yesterday's shorts video, I did talked about, Bitcoin coming down to the upper first standard deviation and the 9 EMA. And if yesterday's candle that just closed were to drop $27,000, probably run the 9 EMA down to the 21 and 20. And if it took out and during intraday price action, the previous daily high, which was at 28,200, then we would most likely go and test the highs. And we did just that. So now we have a new set of criteria or conditions to remain bullish. We need to stay above that upper first standard deviation, above that 9 EMA on a close. And that will preserve price action opportunities to the upside around the upper second standard deviation, which is now coming in at 30,430. And, so anywhere between 30,400 to $31,000 if we start throwing wicks outside of that upper second standard deviation, all the way up to that third standard deviation at 33,317. Now, I will say that to the upside, I am not confident that we would see another run at that third standard deviation. You'll see, as I've mentioned before, it's often an area where we see wicks come in on extreme volatility and price action in those lower term timeframes. We don't often see closures above the third standard deviation unless we're coming off of a nice Bollinger Band contraction or lower volatility period, which back here we went through quite a low volatility period. So I would not be confident in saying that we're going to immediately run up there if you do start seeing the upper second standard deviation get closed above. Now, that being said, I have to tell you why. BBWP is the Bollinger Band width percentile, and in this case, we can see that it has entered a bit of a cool down phase. So we redlined it. Now we have BBWP under the moving average. Both are facing down. Now Stoke is not yet turned. Stoke is still to the upside here. We got like a cross into K into the D read. So we have not yet run out the momentum. We are going sideways at the highs. So that to me does mean that we are going to start seeing the Bollinger Bands contract a little bit. Yes, it's a period of high volatility right now, so we can get really aggressive upside and downside moves, but I'm not looking for major closures daily and above just yet. And I could be wrong, but it's very rare that we would see that with this high volatility read. Now, what I do want to point out here is you'll notice that because the Bollinger Band width percentile is beginning to decrease, and when it's increasing, we saw, the Bollinger Bands expanding to the upside and the downside. But now, because the basis band is pointed up and to the right, and the Bollinger Bands are still expanding, but in this case, they're stretching out to the top side. We're beginning to flatten the bottom side, lower third, second, and first standard deviations and curling them back up. So this does tell me that I should be more biased and we should be more biased towards the upside, but we can't rule out very volatile moves to the downside. So if Bitcoin were to lose that upper first standard deviation at 9 EMA, we still need to be looking for the major support areas like at the 21. And of course, there's support resistance areas here, right? So around the 21, which is coming in at 25,600. Now you'll note that on the Renko chart, I said that closures below $26,000 on the daily, which to bring that back here would paint a red brick, right? So below this line right here at $26,000, where the 21 EMA is just slightly below right now, you'd see a red brick painted. But if we came down to the 21 EMA and bounced off of it, no red brick would paint. There would be just a projection brick that could easily turn into a wick. Now, I explain all of that in my thread, and I, of course, will have a kind of a masterclass video on how to read those. Now, in this case, that means that this is going to be a super important area if you do see price close below that 9 EMA in the upper first standard deviation, because we will be targeting that 21 around that 25,600 area down to the basis band, which is coming into another important area, which is that yellow zone between $24,000 and $25,000. So that's coming in at 24,652 or so right now. And if that area failed, we're looking back to the 200 EMA, lower first standard deviation. Things get under there, then we're looking at the 200 SMA and the lower second standard deviation, which are coming in, 200 EMA is coming in at 22,323, lower first standard deviation, just shy of 21.8 at 21,765. And then we've got $20,000, 20,100 in this case on the 200 SMA, which has already been retested here. So to be honest, I wouldn't be calling for like catastrophic downside. If we did lose the upper first standard deviation in the 21, we got to see how things react at the basis band. And what I think is more likely, what I think is a more likely scenario in this case, is that we see, high level consolidation. So, consolidation at the highs in this particular range, and kind of sideways and up price action. Now, to support some of these theories a little bit further, I want to take a fib retracement here, and I want to show you how this kind of lines up with stuff. So from the initial move off the low to the high, and I'm going to show you the retrace in just a second, we have the 618, and I want you to make note of this, just below the basis band at the 20 SMA. We have the 618 coming in right at 23,885. We have another very important fib number even. The 382 is coming in right at that 200 EMA. And if we lose the 382, you're going to run around the zero read, which in this case would be 19,568. And you're probably saying, but that's not how you should run the fib. You should be running it from the lower low to the higher high. Yes, but I want to show you something very quickly here before we get to that. And that is a fib extension, where we can take the first move, the lower low, to the previous higher high to the retrace. And I want you to note where we're finding resistance. Right in and around that 702 on the wicks. We were previously finding resistance at the 618. We did get a closure above, and we opened above the 618 at 28,247. Now, the 100% of this move, or the one spot extension, is up here just above the upper second standard deviation, right around where $31,000. And that's an area that we've talked about in the past few videos. Upper third standard deviations coming in around the 1272 and the 1414 of the fib extension tool here. Now, I want you to note the zero read is where, well, if we were to take our fib retracement, and this is going to get messy for just a moment, but I want you to try to see what the zero read was. 23,931. That is the 618 of the initial move up, or the initial impulse off the lows. So I want you to make note of that, because the next fib that we're going to pull is going to be a regular fib. And I actually had these fibs on here. I don't know why I'm redrawing them, but I think it's so that I could show you how they're pulled if you didn't already know. That was supposed to be the idea behind that, I think. Apologies there. Now, from the lower low to the higher high, Where's the 618 coming in? It's coming in at 25,360, right where the 21 is. 21 is slightly above that area now. So very, very important area. And then the next really big area is going to be the 50%, and that's coming in at 24,253. So those areas are going to be some of the most important areas. There is one more fib level, and that's going to be at 23,150. And I got a little bit more confluence for you. When we look at the quarterly volume areas, we can go out here and kind of get them all on the screen. We'll turn this off. Sorry about that. A little bit of silence there for you. My apologies. All right. So when we look at the quarterly volume profiles, so I've got each quarter here. The next overhead point of control is going to be the 30,219. So likely area to get hit and find some resistance at if it does get hit to the upside here. And I want you to note that coming into the end of the month, we are currently above the value area high. Big area, because we have the value area high coming right in at 25,120. It just keeps coming up over and over and over again. You'll find this when you do technical analysis anyway, but that's going to be a huge area. The next big area below there is $23,000. So now that we can see some of the confluences there, we can throw on Bollinger Bands and the EMA set here, and we can see that the 21 and the 20 basis are bracketing the value area high of the quarterly. We have the 200 EMA coming up and to the right towards that point of control. So just want you to keep that stuff in mind throughout the rest of this quarter as we do further analysis, in the coming days and weeks. All right, so we did have a 2-day closure. Stoke is still pointed to the upside here, so we still have, momentum pointed up. Obviously, we had the nice pop up, and I would expect this to continue with further spikes in the daily and under time frames based on the 2-day chart, because volatility is still very high. Now, of course, if some of the conditions that I just laid out to the downside, specifically closures below that 27,400, 500 area below the first standard deviation, then volatility in the 2-day will drop as well. But in this case, as it stands right now, with this current candle that just opened on the 2-day, we still have high volatility or high BBWP. That means we are getting expansion on the Bollinger Bands, and we can see that some of the main areas to watch out for, again, the 200 EMA and SMA here on the 2-day, as it is a longer term time frame. When looking at the 3-day, we have 1 day and 20 hours. This still is giving me the bias that we are looking up and to the right, and pullbacks are likely in the timeframes under the 3-day. But in this case, we're above the 200, which is right there at 27,200. So if that area is lost on the daily, we'll be under there on the 3-day chart. And in this case, BBWP is still expanding to the upside. We're currently trading above the second standard deviation and above the previous 3-day close open structure. Been testing the wick highs, upper third standard deviations coming in at 29.9. So very close to where we are. We've come in just shy of that $29,000 a few times already. The 5-day is going to be closing in 2 days and 20 hours. We keep wicking the second standard deviation after the closure above it. And, we have a crossover of BBWP and the moving average here, while Stoke has turned back to the upside here. And then as we head into the latter part of the week and the weekly close, note that we're kind of neutral on BBWP as that's, it's a transitionary period for price action on the weekly. So you typically are going to see a lot of wicks to both sides. And, if things can maintain above, guess where? 24,888 to 25,460, which is around that 25.5 area. Again, that's going to be around where our 618 was coming in on the full retrace there. So again, this is all looking healthy to me. There's nothing too crazy here. So that 618, I just wanted to show you coming right in where the 200 SMA is, and then the 200 EMA is just below it. And go figure, at the 50% is the weekly 9 EMA. We drop below the 382. We're going to start heading back towards that basis band on the weekly. And we're probably going to see the 20K region again get swept. So now closures this week above that 28,321, which we're kind of trading in and around. Then we are looking for further expansion to around that $32,000 at the upper third standard deviation there. So something to be aware of on the 4 hour. We have a 4 hour kind of sideways range going on where it's kind of melting up and to the right, but we are starting to flatten out. Now, while we're seeing the Bollinger Bands flatten out and price kind of remain in this range on the highs on the 4 hour here, we can see the 200 EMA is creeping up there at 24,500. So if we did start to see things very quickly fall apart, look for where the 200s are, 200 EMA, 200 SMA, whatever you prefer, on your 4 hour chart. That's just a little tip, because we would see high volatility pulling down into that area if it was an aggressive move. And most likely we're looking for the snapback then, and then we evaluate whether it's going to be, a lower high structure on those higher term timeframes and also the 4 hour. So that's going to pretty much do it for me today. I will say that I really appreciate you guys. Being a small channel, I appreciate your feedback. I will try to quicken my pace. It's something that I was a teacher for a very long time, so I'm used to lectures and lecturing. So I will try to get out of that mode and I guess get into a little bit more of a YouTuber mode, I guess, and kind of quicken my pace a little bit here. But I did want to say thank you for your feedback. I've gotten a few emails now, quite a few views on that shorts video, and some new subscribers. I want to welcome you. And I do want to say that if you would like to help me out, the best way to do so, please throw me a like, hit the bell. If you're not subscribed, please subscribe. And if you think that others would find this helpful, please share it. I really would appreciate it. And yeah, that's going to be it for me today. I hope you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.